Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting again with Michael Porter. Welcome, Michael.
Welcome, Robin.
Michael, it's Thursday morning we're recording. We spoke last week in our Money Morsel just about, politics changes quickly in a week, and Trump had just been attempted assassination. I'm sure you're following all the conspiracy theories out there. But now we see, as we speculated in that Money Morsel, that Biden has actually stepped down, and we've got, looks like Kamala Harris is going to be the replacement. But we've also having some jitters in global markets. I think the American market had a very bad night last night, and it's feeding into everyone else. So help us. What's happening? Is there a problem?
Yeah, Robin, I think, on politics, we speculated. I think the pressure was just growing on Biden with every passing day to relinquish his role. That debate was probably really the cherry on top. And then, it really just got worse from there. And then a couple of, quite high-profile gaffes at the G20 and things like that. I just don't think inspired confidence in anybody. So, Kamala Harris, it does look like she'll get the nomination, and they've almost sort of hit the campaign trail already, I think, by the looks of things. I don't really think, the impact of that on markets, I think, is relatively neutral. I think that maybe previously there was a growing certainty that Trump would win the election. Now maybe that's much more in the balance.
Yes.
The election outcome is a lot more uncertain, which is probably not a bad thing for markets. I don't think. I think generally markets are quite happy with that. I mean, Trump can be quite pro-markets in a way, not necessarily with tariffs and other things, but cutting taxes. But I think, on balance, at least the American people probably now feel that they have an alternative if they want it. So I think that's been a positive for them as well. It's just interesting now. Everybody's focusing on Trump's age. He's 78. Biden was 81 or whatever he was, and so now Trump's considered too old. So it's funny how the circle turns, isn't it?
Yes,
Robin. And I think the other thing that's going on, and what we also can't forget, is that we're in the middle of earnings season at the moment in the US. Companies are reporting, dozens of companies report every day, quarterly earnings. And that's giving an insight into kind of what's happening on the ground, So there's definitely some pressure in consumer-facing businesses. There's no doubt that there's some slowdowns on the consumer side, which I think we've been talking about for quite some time, and concern that the US economy is slowing. Yesterday, the sort of weakness in the market was driven by the tech stocks and the AI-related stocks, and there's quite, ASML came out last week with actually pretty solid results, but quite a lot of it driven by China. There's concerns around export restrictions on China in terms of the technology and the sanctions and things on China. They fell quite sharply. That was sort of the first crack in the AI hype, in the semiconductor hype, if you want to call it like that. ASML is still a fantastic business, but I think sometimes, valuations, we've been saying for a while, valuations get out of line, and there's like this wall of money that chases these AI stocks, and maybe we're just seeing, some sort of return to normality. I think actually the other thing that we have to bear in mind in this whole process, Robin, is how much money has gone into ETFs. And ETFs are essentially valuation agnostic. If you get an inflow into your ETF, you are just buying whatever your ETF invests in, regardless of the price or whether it's good value or not, because that's not your mandate. Your mandate is to buy whatever that ETF represents, And so I think that's pushed valuations. And if the market starts to turn a little bit south and some of that money gets withdrawn, they're going to sell regardless of the the valuations.
Yes.
So it kind of works on both ways, So listen, is it something more sinister? I think the markets really is starting to price in a rate cut. But as we talked about, I don't know, maybe a month ago, we were debating about a month ago the inflection point between cutting interest rates is a good thing for valuations, and cutting interest rates is a bad thing because the economy is slowing. And I think we kind of at that inflection point now where there's a little bit more focus on actually company results and what's happening. And Visa is one of our favorite companies. They came out with very solid results the other day. There's nothing wrong with them, but they were a little bit weaker than expectations. And it just reflects a slowdown in spending, people not spending quite as much on their credit cards. It's a big global machine. People spend on their cards all the time. But at the margin, if you do one less transaction a day or your basket size is $10 smaller, then it just comes through. And I think that's where we're really seeing these things. So, so Robin, I mean, I think there's going to be some volatility. I do think that the economy is slowing, and I think central banks around the world are certainly moving on to the sort of rate cutting cycle. But whether, I suppose the risk has always been whether the Fed can engineer that soft landing where, they bring inflation down, without growth collapsing.
Yes.
And we're going to see whether they've managed to do that in the next 6 months.
So obviously the pressure's very much on them in terms of a rate cut. Locally, Michael, we also had inflation numbers this week, and they were also suggesting rate cuts soon.
Yeah, Robin, it was interesting. Last week we had the MPC meeting here. I think 2 of the members voted for a rate cut. The decision was not to cut rates in the end. But I mean, I think even in our market, the possibility of a September rate cut has risen to at least 80%. I would have thought somewhere around there. I mean, we're definitely heading towards that. Inflation is quite benign. And I think some of the issues in our economy, Robin, are still, some of the good news and some of the momentum that we've got going for us here and the change of mood is still valid. But we just are part of a global cycle. So, we've got mining companies that are at the whims of sort of commodity prices or sentiment. We've got Richemont, which is suffering from a slowdown in luxury goods globally. I mean, LVMH had results yesterday. They were poor. I mean, China has been exceptionally poor over the last quarter. Growth has almost collapsed in the Chinese luxury market. To be as it was echoed in Anglo's results today. And so, you've got Naspers, which is also linked to China. You've got a lot of stocks on the JSE that has some sort of global connection. So there's an ebb and flow, and we can't just because we're hoping to chart our own path doesn't mean we're immune from just the ebb and flow of the day-to-day of what's happening globally.
Oh, awesome, Michael. Well, it's always nice to get an insight into that. Thank you for giving us that. Thank you for joining us. Please don't forget to like and subscribe, and we'll catch you again next time. Bye-bye.